All right, if you're doing business in the UAE, you've definitely come across VAT. But let me ask you something. Do you really know the difference between exempt and zero-rated supplies? Because honestly, getting this wrong can seriously mess with your bottom line. So today, we're going to clear it all up.
Most people here know that and think it's all the same thing. It seems so straightforward, right? If the customer isn't charged VAT, it's got to be the same deal for the business. That's what almost everyone assumes.
Well, they're wrong. And that mistake? Oh, it can be a really costly one. See, in the UAE's VAT world, no VAT actually means two completely different things. And mixing them up, that can directly and pretty painfully hit your profits.
Okay, so let's get right into it. The core difference, exempt versus zero-rated. What do these terms actually mean for a business?
Okay, let's tackle VAT exempt first. On the surface, it's simple. A business doesn't charge VAT to its customers. Easy, right? But, and this is a huge but, there's a catch. That same business cannot reclaim the input VAT it paid on its own expenses. We're talking about the VAT on things like office rent, buying new equipment, consultant fees, all of it. That VAT just becomes a straight-up, unrecoverable cost for the business.
And this is where it gets really interesting. Just look at this comparison. For both exempt and zero-rated supplies, the VAT charge to the customer is, well, zero. From your customer's perspective, there's absolutely no difference. But now look at that second row, the ability to reclaim input VAT. For a zero-rated supplier, it's a big yes, but for an exempt supplier, it's a hard no. And that right there, that's the $1 million or, multi-million dirham difference.
So you're probably asking, how do I even know if what I'm selling is exempt? Well, the good news is the law is super specific about this. It's usually for things that are seen as socially essential or just plain difficult to tax. There are 4 main categories, so let's break them down.
Yep, just 4. But getting these 4 right is absolutely critical for compliance. So let's walk through them, and we'll start with what's probably the trickiest one.
First up, financial services. This one's a biggie. Just think about your bank for a second. They're doing all sorts of things, right? Loans, currency exchange, managing your account. The way VAT applies to these services all comes down to one thing: how the bank is getting paid. And this table makes that distinction super clear. If there's an explicit fee, a line item that says loan processing fee or something similar, that service gets taxed at 5%. Simple. But if the bank makes its money from a margin, like the interest it earns on that very same loan, that income is exempt. It's all about fee versus margin.
Okay, next up is local passenger transport. Think about your daily commute: the bus, the metro, a water taxi. If it's just about getting people from A to B for their regular life, it's exempt. But, and this is the key, a fun sightseeing bus tour for tourists? Totally different. That's considered entertainment, so it's subject to VAT.
Number 3, residential buildings. This one's all about where people live. So if you're renting an apartment for, say, a year, that supply is exempt. It makes sense, right? It's to avoid driving up the basic cost of living. But if you're just staying in a hotel or a service department for a week, that's a different story. It's considered a service and is taxable. The real test is this a genuine long-term home for someone?
And our last one, number 4, is the supply of bare land. This is pretty much exactly what it sounds like. We're talking about a plot of land with, well, nothing on it. No buildings, no pipes, no civil engineering work, just land. The second you start building something, the VAT rules change completely. But the sale or lease of that empty, bare land, that's exempt.
Okay, so we've just walked through the 4 exempt categories, but why does any of this really matter? I mean, whether you're a finance student trying to get your head around this or you're a seasoned pro, what's the real-world impact? Let's get right to the bottom line.
This is the big takeaway right here. The term VAT exempt sounds pretty good on the surface, doesn't it? But it has a hidden sting. Every bit of VAT that business pays on its own costs and expenses becomes a sunk cost. It just disappears, eating directly into your profit margin. This is why being zero-rated is so much better for a business, because they get to claim all of that input VAT back.
So, from now on, whenever you're looking at a transaction, you have to ask that critical question: is this supply exempt or is it zero-rated? Because the answer isn't just some boring detail for your accountant. It goes to the very heart of your cost structure and ultimately your profitability. Knowing this difference isn't just about compliance. It's about smart business strategy.